Good morning, guys. Welcome to this Monday, December 8th. And we are looking at the market, which is a little bit to the upside, pretty much holding on to the gains. It was looked a little bit gnarly here on Friday for a bit. They were down here, they were up and then down, but not a whole lot to the downside. It just felt like it was not quite getting that traction from what we saw early on Friday. But so far, the overnight has been holding on pretty good, and we can see in the bigger picture we are right up here against the in this attractor area still, that 6880. That's pretty good. I mean, we managed to scratch up about that 6800, and so far we're holding all these gains, and been it's not been like a one-off to the upside. Before I keep going, the news we have this morning, nothing. No news this Monday. This whole week is going to be kind of light. We do have the Fed meeting coming out. It starts tomorrow, Tuesday, and then we have the Fed announcement on Wednesday. That's going to be the big thing for the week, I think. For Wednesday, we have pretty much it's a small news reports coming out, productivity coming out tomorrow, job openings they're coming out tomorrow though, but and the Fed announcement on Wednesday, international trade jobless claims, PPI final coming out on Thursday, and then Friday is a no news Friday, so it's pretty light news week except for the Fed announcement. So we're gonna get a good read as to if the market is really trying to take this higher, or if there's gonna be they're gonna kind of run out of gas here. Uh, I'm gonna start off though from the long side, or I'm gonna start primarily range bound. As you can see, most of the trading days has been primarily range bound, uh, favoring the long side of the market. So we're gonna start off pretty much the same way, looking to buy weakness. At this point against the 6880s, the 687273s, the 6865s for rotations back up. I would say below 65s, I'm just taking off the long buyers, going back range bound. Still looking to buy against the 55s down to the 45s here for rotations back up. Below 45s, I think you can get a little bit gnarly. And that would be getting back into this lower distribution. We have a nice ledge here at the 6062, and that's just below this yesterday or Friday's session lows, day session lows. That three-letter ledge, if they get them down below, up below that one, that three-letter on the F1 here, if we get below that one, I think the next level down is going to be that 6840 support area. So that would be consistent with that 45 support edge. If that comes out, I think we may be in a little bit of trouble here. But it seems like we always get, or we have been at least last week, getting at least at one time pre-market, or sometimes during the day session, one of these crazy sell-offs. They run it hard to the downside for a half hour maybe, and then they stop and then just let it drift back up again. It's been the case for that it's like 2 or 3 sessions last week. It just comes out of nowhere. So we just had to watch for that. That would be just technical trading, algos running this market up and down, shaking out week long or short positions depending what side they're going on. But since we are grinding higher, I get a feeling that the run is going to be to the downside, if anything. Try to run out week long positions, and that's kind of the dynamic we are looking for. That one, if you start seeing that one, you had to be early on a short, and you have to be um, uh, kind of selling into it if you wish, or not selling into, but kind of doing a go with type of trade. A very uncomfortable entry in that case. Just kind of hop on the bandwagon if you wish. But yeah, you had to pay attention to it. I mean, if you miss the beginning, it's not the end of the world. I mean, there's plenty of range on a move like that. You just can't chase it all the way down. You get 1 or 2 opportunities, or if you're early, you can sit in that trade for a bit if you're looking more of a trending trade. But then anyway, so early on here, we're going to be starting off range bound, looking to favoring the long side. Initially looking to buy against that 6880s, the 7273s, the 65s for rotations up. I believe below 65, we're going back range bound, still looking to buy against that 55s, 55s, and the 45s for rotations back up again. And below 45s, I think we are in a little bit of trouble, but we'll see. So on the way up, short opportunities against the 6890s and the 6900s. Those are the two up in front of us, and those are kind of well established now. The 6900 got retested again, knocked it right back down again. And we'll see if it's going to be more of a Christmas and Santa rally kicking off here. That would be what I would be looking for, a Santa rally going into the end of the year. So that's how we get started. If they take out that 6900s, just stay on the long side at that point. I think it can be a pretty good day if that happens. On the NASDAQ, the NASDAQ capital flow. And you can see same story there, but NASDAQ is up against this resistance area. This is the area they had to kind of get past before we get excited about the long side again. They've been in this area, this twilight area. It was a big low volume area on the way down. They've been building value a little bit before they started taking the next leg lower. And now on the way up, it's kind of stalling here again on the way up, and we kind of had to clear that 25,800 level before we really start thinking about the long side in any big way. But looking at this right now, so I would start off range bound primarily. I would look to buy. I would favor the long side, same dynamic as on the ES. And on the NASDAQ, the levels are buying against the 750s, the 700s down to the 650s, 660s for rotations up. I would say below the 660s, we take off the long bias. Stay looking to buy against the 590s and the 530s for rotations back up. If they get down past that 530, that would be, you see that that was the gap high before they gapped up. This is the high of that prior rotation when they started heading lower, or this is on the way back up again. So this is on the way back up. They stalled against this area, the 550s. Briefly, they took it out. They've been hanging in that midpoint. So if they start taking out this area, this general area here at the 520s, I would be more concerned about the short side at that point. But initially looking to buy against these first three levels of support. That's the 750s, 700s, and then the 650s for rotations up. Two more levels, is 590s and the 530s for rotations back up as well. Just a little bit less aggressively. Now, they could be nice short there, as I said. If they start running this lower in one of those hard rundowns, if they start taking out that 650s, they have a couple of nice ranges here on the downside. They can potentially run this. We have stuff in between, though. You see that's nice ledge here from Thursday. That could potentially hold. We have a mode here that is one of our levels. You have a small overnight ledge at the 610. So there's small levels in between. You potentially could stall it, but I think the bigger edge is going to be kind of right here at that mode from Thursday on the way down, and then the lower end of that range at the 530s. On the way back up, if they start taking this higher, short opportunities against the 800s and the 860s for rotations back down. We are right at the good area of resistance. So there could be a little bit of churning here before they can take it out. But if they can take it out, I think we have a pretty clean shot at least running it up to these 26,000s, maybe even higher. So that could be a nice long trade. They take out the 860s here. The next real attractor is going to be up here against that 26,000, 26,090. These two edges here. That's going to be your attractor area. So that's how we get started on the NASDAQ. Finally, bonds. And this is an interesting one, The bond market they're talking about the potential quarter point rate cut coming out here on Wednesday. But the bond market is trending lower. So in other words, yields are going higher. That is kind of backwards, right? So you have let's make this guy bigger and then back to the F1. Oops. I'm looking for my F1. Where is it? There it is. So you can see they've taken out this edge that is 116s, and we are in this territory here heading down to the 114. So that's kind of counterintuitive. So I mean, it's if you're looking at a quarter point cut and you're thinking that that's going to drop the overall rate structure, the long-term yields. Well, sorry, it drops the short-term yields, the overnight borrowing rate, but it's the long-term yields are not budging. They're going in a different direction, so steepening that yield curve, and that's kind of concerning. And I think I heard actually a guy talking about that on the news this morning, that they are more concerned about the Fed starting quantitative easing again. So they were doing quantitative tightening before when they were tightening up the balance sheet. To stop doing that. And if they start doing the quantitative easing, I think there's an inflation concern out there. And that's the reason the long-term yields are coming down. It's a higher inflation. That would mean you want to get paid more for your money going into the future, since it will depreciate more. So that's the concern there. We'll see how this whole thing develops, but that to me is concerning if the yields are going higher, long-term yields, because that's where, I mean, the 10 years where they base the mortgage rates on. So if the long-term yields go higher, that means just the mortgage rates and everything else stay high. Refinancing loans is going to be shitty, so it's just not a good sign. But I would start off from the short side on the bonds right now. Looking to sell strength 115.20, 115.26 up to the 116s. Rotations back down. If they trade up above the 116s, I would be back range bound. But at this point, looking for short setups against the 115.16, the 115.20, 122, 26, 116s for rotations back down again. And let's see, the attractor is going to be down here, right? It's on the screen, not too far down, but looks to me like a pretty orderly move to the downside, not any free for all to the downside by any means. Anyway, so right now we backed off a little bit from the 1508s, trading back up again. So we'll see if I can find some short opportunities against these levels for rotations back down again. Alrighty, guys, back to the ES, and that's how we get started. So I think the big question is how the market is going to be about grinding this higher, or if you're going to be stuck in the range here waiting for the Fed announcement on Wednesday. We'll find out. All right, guys. So good trading. I will see you guys back at 11:30 for the next update. So good trading, guys, and I'll see you back then. There you go.